Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's relaxed morning call. It is Friday. It's been a heck of a week, a long week, lots of action, lots of trading, lots of headlines, and today was another one. Okay, the 8:30 news came out a lot stronger than people anticipated. Same thing with the GDP yesterday. So people are thinking tapering could happen sooner than later. So right now, good news is bad news because this rally has been somewhat supported by a lot of, Fed stimulus. At some point, though, good news will be good news for the market and bad news will be bad news, but that'll be in a normal world, which we haven't seen for a while. But for right now, as far as the market's concerned, midweek we started talking how something didn't smell right, how the Russell was going lower and technology was lethargic, and the Dow made new highs on, I believe, Wednesday, and my 12 to 15 stocks in high beta land were all down. Gave me some clues to take risk off. So then yesterday, all of a sudden we had a big engulfing down day in a lot of our key stocks, a lot of the key markets, and I think most of us on the virtual trade floor were out of the way. And some people actually made some money short. The diversion was Twitter, which is kind of humorous because every time I look at the newspaper and I read the headlines, it's Twitter soars. The stock opened up at 45.10, closed at 44.90, down 20 cents from the opening. It soared for that 0.25% of America that might be on the buy side, that pays the streets, that got a free lunch from 26. For everyone else out there, if you bought it yesterday, it's down 50 cents, you're lower. So at this point, Twitter, you're going to hear about it, you're going to read about it. At this point, I think it's just a noisy avoid. There was really no opportunity for the first day of trading, and now you can't even short it yet, so I would just leave it alone and look at the other action out there, because in the markets now, the futures are lower. And what I'm going to do is I came in net short. I'm going to cover some shorts, which I already started doing, and I'll figure out if there's any tactical areas to be long in some of those high beta names, around yesterday's low. So we can maybe look for some red dog reversals on some of these key stocks at yesterday's low pivot for action. Anyway, you look at the chart of the SPX, you will see that here's a trend that's been intact since November. This was an outside day that led to a correction. Here is that head and shoulders top that led to a correction. Here is that false breakout right here that led to a small correction, and now you have this engulfing bar. This, to me, is a very ugly candle. Okay, it was an outside day where we were actually higher. We were above the, on the ECB cut, we were above this area, closing the lows, engulfing this entire range. That should lead to some more downside. Should. We'll see. Okay, right now you have 1748. We're a little bit below. Pre-market, I think I've already covered some of my spiders. I'm going to hold some. Here's your 21-day. Here's your prior pivot, which is at 1730. So you'll see what this day one leads to. If the bears have any control over the next few coming sessions, they won't let the bulls reclaim the 1758 to 1762 area. The Russell, which we talked about, that's already had a pretty lengthy move to the downside. This was your day one. This was your reversal as a lower high, and here is your downside follow-through. Today, maybe you get a small little trade, if it does an 80-20 through this 107.14, right at the 50-day. So, and there's your trend line. The trend line has been intact for the majority of the year. So as you come close to here, hopefully if you were short the Russell, maybe cover a little bit into it to see what's going on there. As far as the Qs, yesterday, engulfing the entire upper range. When the Dow made new highs on, I believe, Wednesday, this pretty much was negative, giving you a sign that this is probably not the place to be, and then there's your downside. So here's your low. It's 81.37. Use that as your pivot today for action. Below it, continuation short. Below it, come back above it. Maybe you need some time to retrace, and that would be your red dog reversal type tactic. You look at something like Amazon and some of these names, a lot of them got hit. Amazon showed you the divergence to the market on Wednesday. There was your downside follow through. Now it's at the 21-day. Use this low as your pivot. Below it, perhaps you get some more downside. If it goes below, comes back up, maybe you get a small tactical Friday red dog reversal for cash flow. Same thing goes for Google. Okay, this is what you got to look for on all these things. It broke this upper range. You now have yesterday's low of 107. Below it, perhaps it goes lower for a short. Back above it, tactical long. Apple, same thing. Okay, broke this minor pennant to the downside yesterday. I think some people made some money short there, closing at 21. Now see how it deals with 512.38. Does it go below it and come all the way down to 507? Or, does it go below and come back above it and, mute some of the downside? So that's what, my traders will probably be looking at today and figuring out. Same thing with like a Tesla. Tesla's been down a lot since earnings. It broke the 50-day. It's been good downside follow through for the short side. It's down another $3 this morning. Maybe there's a cute trade around here. Okay, first things first. This was a great trade while it existed, when it was hovering and following the 21-day moving average until it pretty much, broke trend right here. If you remember the market, it actually made new highs during this time period, and Tesla didn't, and that was one way out right there. Here it bounced into earnings. We don't take stock into earnings, and then it was priced for perfection, and the earnings were good but not perfect, and there you have that. So here we are below all these moving averages. It's down today. Maybe if it can get back above 137.62, you get some kind of cute, buy setup. But for right now, it's opening a little bit lower. My target was 135-ish, which is pretty much right around here. So, if you're still short, congratulations. I would definitely just maybe cover some, as it has come from 180 down to here. That's a pretty big move lower, even though, the size of the move was higher. But I'm just saying, you know me, I don't stick around for the juice. So I think the meat and potatoes of this short, it could be done for the short term right now. As far as some banks, at some point, rates higher will help them. We'll see how they get treated today. Yesterday, the XLF broke this area, broke below 2048. This was your short-term top. Here was when this ascending channel broke to the downside, and then here was more follow-through, and now it's coming into some bigger support. So we'll see how that handles that. So, basically, at this point, good news is bad news, because at some point the Fed's going to have to do a little bit of tapering. The market's going to have to get used to that. Again, remember, we were getting used to that coming into September, and then the Fed didn't taper and then threw off all the correlations that we had. And now, we start getting positive data. They're going to have to start coming back to the table. And then at some point, rates higher will be okay, because rates have to go higher. It can't be where we are forever. And some people would like to put some money in a CD or get some money in the bank, especially some of the retirees. But anyway, that's a whole nother ball of wax. Bottom line is what to do today. Perhaps we get more downside follow through, or yesterday the travel range from 1775 to 1745, 30 handles might need a little bit of retracement to test some areas. So for me, came in net short, covered some of it, after the jobs number. I'm going to see if things start going positive for a trade. Use that pivot that we just talked about in whatever you're trading. Yesterday's low. Below it, maybe you get some more continuation to the downside. Below it, then back above it. Maybe buy versus the morning low and figure out if you could get a tactical long, as a lot of these things traveled a long distance down yesterday. So with that said, it's been a long week. Hopefully you guys did all right. Hopefully you didn't get too crazy frustrated yesterday with Twitter, because it wasn't an easy trade for anybody. It opened up at 45, went to 50 in a flash. You couldn't take a lot of size on that move because it happened too quick. And then on the pull-in, went straight down to 45 and then broke 45. Then it gave you a trade in the afternoon from 45 to 48 and then fell like a rock too. So overall, not a great trade. Okay, if it opened up at 35 and closed at 45, I would agree with the newspapers and say Twitter soared. Okay, Twitter did not soar. It was down 20 cents from the opening price. Very hard to make money. Only the 0.25% of America was involved from 26. Everyone else is going to have to figure it out. And for right now, give it some time, give it some space, and there'll be a better setup. I'm not saying it's going to do what Facebook did and go all the way down into the low 20s, but there's no need to be enamored with it right now. Let the technical set up, and I would be more, worried, not even worried, just watch the market more. Yesterday, there was a lot more opportunity in the stocks than in Twitter, but Twitter was a sideshow. And from now, let it be the sideshow as we figure out where this market can go, and then, what type of setups we could have. I'd love to see a sell-off into Thanksgiving, and then a little bit of a rally going into year-end. That would be, if I was writing the script. But I'm not writing it. I'm just involved in it, trying to read it like everyone else. And you can read between the lines. It does tell you something, and that's what the action did earlier this week, and here we are. So have a good weekend, because it's been one of those long weeks, and you deserve a little break, and next week will be another one. Have a good one.